All right. Good afternoon, or should I say good evening, everyone. Tim Davis coming to you guys with another market review. And today is now Saturday, January the 7th, 2023. We are into the new year and have completed the first trading week of the year. Time is now 5 p.m. So if you guys followed me last week, I pointed out some ranges by looking at the futures of the Dow Jones, S&P, NASDAQ, and the Russell. So on each one of them, I pointed out certain ranges that we could possibly see a continuation of the rally as we go through the first week of the year. And some ranges were in mind. So each one of these levels represent an area of resistance. And I showed you guys last week how we were trading in a tight range prior to breaking above this level that we are now. Prior to breaking above that first level of resistance, we were stuck in a trading range for a little bit over about a week or two. Now that we have broken above that trading range, what we see here, and I'll back this out, see if I can show this. I'll show you guys what I'm looking at on the DIA, which is the Dow Jones futures. I mean, it's Dow Jones ETF. I don't see what I'm looking at on there. Let's look at the S&P. Wait a minute, let me back this out. Okay. I want to point out something to you guys to show you guys something to pay close attention to as we go through next week. Bear with me 1 second. Okay, I want to look at the SPY, which is the ETF for the SPY. What I want to point out here is, as we go through next week, there are some gap fills that we're going to see price action attempt to draw to. Still areas of resistance. Ultimate area of resistance is right up here. Now, are we going to get that far? Not sure, but here's some gap fills. Looking at the SPY, the price action will more than likely be a draw price. The price action too. Be a magnet for price action. These gaps with volume creeping higher as we ended the day on Friday, we could continue to see a slight rally as we go into next week. So keep that in mind, that we could continue to see a slight rally as we go into next week. CCI is already in overbought territory. Williams percentage is there, and full stochastic is heading there. Now, let me switch back to the E-minis. Again, we have gaps if you're looking at the ETFs above price action. Let me go back to the Dow Jones so we can take a look at what I was pointing out last week. There's my volume bars. I was looking for those volume bars. There they go, right there. So you can see the volume bars on the Dow Jones futures daily chart as it continues to increase in value as well. So here are the targets that I set last week. So the first target, if we break that one, the next target is going to be in play, which is going to be around 3,400. So we could see the Dow Jones futures get up to 3,400. And if we continue to march through that, and it is possible, this entire range here is going to act as a range-bound area for the Dow Jones futures. It's going to be a wider range, that's all. Wider range. This higher level resistance is a longer term level of resistance where we failed back in December. And if I was to draw this out and take a look at another time frame, you'll see the areas where we failed that level. Back at the beginning of the year, we hit that upper trend line and pulled back. Then we didn't hit it again until the end of the year. And we pulled back. So looking at the shorter time frame again, here's a daily chart. There's the ultimate level of resistance right around 35,228. And price action is starting to move higher. Now, are we going to get all the way back up here to this 3,500 level? It's hard to say. Nobody knows. But I do know that it will be resistance if we do get up to that level. So this is some things we have to pay attention to next week. See how the volume continues to move next week. If we see price action open up on Sunday night as the futures start to run and Monday morning, and we see volume continues to stay high or creep higher, then we can see price action continue to creep higher. First level of resistance will be here. The ultimate level of resistance will be here. If we break through this upper trend line or the long-term level of resistance, that would be a good positive for the bulls, but I don't think we're going to get that far. So let's see how price action does as we travel through next week. Keep in mind, we are still in a bear market. Look at the S&P E-minis. Going to see the same setup and the same scenario. Back at the top of the first level of resistance. And if we break through that as we go to next week, we can see price action on the S&P E-minis begin to make an attempt to challenge 4,000, which is where we will more than likely run into the level of resistance if we continue to march that high. As we got a sharp rally here, and look what happened right after that. So we're off immediately back down into this range. So do we get a rally back up to that point and then back down to this range? I think eventually, once this rally is done, I think the next step, we will break this lower range. So that may take the rest. That may take a minute for that to play out. Could take January for that to play out. Now, if we look at a longer term monthly chart of the S&P, see how we've been in this longer term downtrend since the beginning of the year. And the monthly chart is showing price action is approaching back at that level. Do we rally and punch through this and start to have a prosperous 2023? I doubt it, but we have to wait and see. Right now, odds are pointing to this level being a strong level of resistance. Still in the bear market, and this level is showing to be a strong level of resistance. Every time we hit this level, we have found a way to pull back. And are we going to hit it again? We have to see. Look at the NASDAQ futures. Same scenario. This is a monthly chart. Every time we've hit this level, we have to pull back. Look at a near-term chart. We see near-term strength. Again, here are some levels of resistance to pay close attention to as we go through the week next week. Right around this 11,500 level is a level to pay close attention to. And if we break that level, here's resistance here. Oops. Switch this. You'll see resistance here. Which ultimately will more than likely meet up with resistance right around here. So right around that 12,000 level is a level of price action could make an attempt to rally to. That's a big move if we do rally all the way up there, folks. But the bigger the move, I think the bigger the drop. We'll see. So we got to see what happens next week. Does the NASDAQ futures break this first level resistance and make an attempt to head up towards 11,800, 11,900? We'll have to see. We have to wait and see how things pan out as we go through next week. Nevertheless, I think eventually we'll hit some resistance somewhere between these two ranges and make the next leg lower. So be patient for those who are swing trading and trading with the bulls right now. Just be careful. Like I said last week, be mindful that any strong rally more than likely be met by some strong selling pressure. Keep that in mind. Take a look at one more thing. Take a look at the VIX. And here's the VIX, just the opposite of our markets. Here's that range. So between 20 around 20 bucks up to about 23.77. That's the range that the VIX is still stuck in. Still stuck within this range. So with that big red candle we got on the VIX on Friday, we could see VIX travel back to the bottom of this range. And the question is, if we do tap the bottom of this range, will price action hold? We have to wait and see. But this is the range that we're still stuck in. Eventually, we're going to break out of this range. If we're going to break up and out, we're going to break down and lower. But so far, that range has been a strong range with some strong support levels and strong levels of resistance. So we have to see what happens as we go through next week. By the end of this week, in the next week, we could see price action back down to the bottom of this range. We have to wait and see what happens if we get to the bottom of the range. Do we break down below it, or do we rise above it? My guess is I believe that we eventually rise above it. We have to see, wait and see. All right, folks, that is all I have on your major markets. We'll take a look at one more area, which is gold and silver. Told you guys, looking at a longer term aspect of gold and silver. Here's a monthly chart of gold. As you can see, we have multiple months of red months up through 2022. 1, 2, 3, 4, 5, 6, 7 red months in a row. 2022 after we hit a peak of around 2075, 2080, we hit that level. About 2080. And right now we're at 1870 on the price of spot gold. Look at the monthly chart. Look at the momentum. The momentum is seeming like it's picking up price action wise, but the volume is dropping off on a monthly chart. So we have to see how that pans out over the next month or two. But right now, the momentum is shifting higher. Here's a weekly chart. We are in overbought territory, so it would not be surprising to me to eventually see a pullback, a check back to this level of resistance. Here's our daily chart. As you can see, we are in that upward trending phase. And silver kind of looks the same way. If you look at the full stochastics and the wins percentage, it is creating a lower low. So it is trending lower. The oscillators or the momentum, if you look at the full stochastic wins percentage and CCI, all trending lower. So we could eventually see price action stall and we start to get a pullback in gold and silver. Again, I think any pullback is not going to be sustainable. I think we could see a pullback eventually in gold and silver, but then after that nice pullback, I think we're going to continue to see prices range much higher. I think by the end of this year, we could see gold and silver prices possibly make an attempt to challenge the ranges that they fell from back in 2021. So we have to see what resistance level that they fell from back in 2023. All right, folks, that's all I have for you guys on this particular weekly market review. Again, we're still in the bear market. We're not out of this bear market yet. Until we get out of this bear market, I think these strong rallies are not going to be sustainable until this bear market is completely over with. And I don't think we are at the end of it just yet. All right, folks, until the next video, Tim Davis here signing off. Enjoy the rest of your weekend. And I will touch base with you guys sometime in the near future.